Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Today we will take a look at the Bitcoin again. Usually we take a look at it Thursday, but as we are coming to Fed meeting, I think that makes sense to be prepared to this important event and we update our view on the Bitcoin market. So first of all, on the Bitcoin market, you could see that we've got the daily bullish grabber pattern. This pattern itself suggests the taking out with this top. And in fact, if you remember what we said on Monday, we considered a possible upward action here as well. So we said that before the major reversal or major retracement, if it will happen at all, of course, but before any other action, market really could try to create the new top just because it corresponds to idea on the interest rates. Cryptocurrencies currently stands in a tight relation to the interest rates, and the interest rates we have the three drive sell patterns forming. But to complete it, interest rates have to show the upward action to the 1.66, 1.68 level. That is not completed yet. That in turn could mean that grabber theoretically could work. At least if you have the plans to take the short position, this is your risk factor. And personally, I wouldn't take any short position until I will see the clarity around this pattern. Or maybe it makes sense to consider taking the short and this stop sell order somewhere around 52 area. If market will reverse down, break below these lows, taking out of these lows and raise the pattern, that will be relatively safe trying to take the short position because market could accelerate down. But until grabber is valid, it will be rather risky to take the short position right now. Second moment that we have to understand is that whatever technical picture we are considering, everything will depend mostly on what the Fed will say and its impact on the dollar, which is consequently will make impact on other currencies, assets, and Bitcoin is not an exception. So that's actually makes overall situation a bit difficult for forecasting, for proceeding what could happen. On the 4-hour time frame chart, if you remember, we talked about the butterfly and possible downside reaction. But first we said market probably should show this upward action. This has not happened because on interest rates, this also has not happened. And in the first part of the week, interest rates also were showing the downward action. Meantime, you could see that mostly market already has hit the 30% support area here. And that is usually necessary minimum reaction on the butterfly pattern. Once market hits at least 30% of the whole upward butterfly action, butterfly treats as worked properly. So this is minimum target of the butterfly. So theoretically, market of course could proceed lower and even drop below these lows, but the minimum demanding target for the butterfly is the 30% retracement. And now we already have got it. The tricky moment stands in the reaction, so you can see market slightly has not complete the butterflies we have suggested. But the reasons for that actually is the pattern that we have on the hourly chart. We already talked about it on Monday, so this head and shoulders our XLP that has been hit perfectly, and this is mostly the reaction on the market. Another reason why I think that it could be risky for taking the short position currently on the Bitcoin is this type of action. So you can see on the hourly chart, this is not really a support pattern, it's a bit ugly, choppy, but it keeps the shape of the possible head and shoulders. Since it will be driven by the Fed statement, it's not important how ugly this pattern looks like. Because the major driver is a very important fundamental event, and even bad looking pattern could work properly. If you combine this one with the grabber that we have on the daily chart, it shows you that currently, at this moment, it's a bit tricky moment for taking the short position. That's why in the current circumstances, I would suggest that it makes sense for taking the short position if you would like to. You need to see and wait for a breakout below these lows, so drop below 53 or better to reaching of the 52. Maybe it makes sense to use the stop sell order. That's up to you. So you could, for instance, trying to use stop sell order at 52, 52.50, for instance, and if market will start dropping very fast to the downside, you will step in the trading on the short side. For the others, if you consider taking the long position, you could try to use this pattern, but I'm not sure that this so small range will able to absorb the volatility that could happen around the Fed statement. So patterns might be still valid, but relative volatility could drop you out of the market. So, but theoretically, if we wouldn't have any Fed statement and volatility, I would say we could use this head and shoulders for taking the long position right at the bottom of the right shoulder, around 54.70 probably, right, 54.70 with the stops below these lows. So this is the way how we usually deal with the grabbers, and if it's accompanied by the intraday patterns, which in our case is the head and shoulders. So that's possible scenarios that you could follow in case if you would like to take the part in the journey with the Fed statement. As usual, the most conservative way is just to wait and see what will happen and then make the decision already when you have the full information and in the correct direction in what market will start to move. But if you'd like to anticipate that, that's the patterns that you could consider and make the decision.